If we weren't looking at Greece, we would be looking at Puerto Rico. How does Puerto Rico dovetail into the U.S. mix?
Well, for U.S. investors, Puerto Rico is a bigger and more important story. You know, the biggest difference between the two is that investors still hold Puerto Rican debt. Investors don't own Greek debt anymore. We had that default and restructuring back in 2012. What Governor Padillo announced at the end of over last weekend and on Monday a week ago was really a fundamental change in the government's approach to how it was dealing with its debt sustainability crisis. Greece has a debt sustainability crisis. That's what we're dealing with here today. In Greece, Puerto Rico similarly has had a long-running debt sustainability crisis, and the answer was that an admission, I think a long overdue admission, that the debt is not payable. They also need to have a fundamental restructuring of what's going on in their economy.
You describe, you know, when debt collapses, the 5 stages of grief. You're using the Elizabeth Kubler-Ross model.
5 stages of Greece, yeah.
Yeah, 5 stages of Greece. So where are we in for Puerto Rico? What stage are we in?
I think we just exited denial.
Okay.
And the admission that the debt sustainability is on a long-term, unsustainable trend is exiting the denial phase that you can postpone and roll over and use liquidity extensions to keep the game going, is exiting denial.
The arch question here, Vonnie, is with this turmoil, Greece, Puerto Rico, the Chinese stock market, among others, does that set up a framework that drives interest rates higher? Or, Jeff, does it drive interest rates lower?
Well, certainly a lot of those issues are more about risk and economic downside risk, right? The story in China is about the inability of stimulus measures to, first and foremost, everyone's focused on the inability of stimulus to support the equity market, but underlying that is the concern about their inability to stimulate the economy the way that the past efforts have. And that's a much more bigger issue for the global economy because the Chinese economic performance influences the rest of the world, and that influences the outlook for interest rates.
Well, exactly. And to Tom's point, are we waiting for the Federal Reserve to do something before we actually see higher rates?
Well, I mean, the Federal Reserve is focused on the performance of the U.S. economy, and if not for all these other issues, we might have been talking about the payroll report that we had last Friday and the lack of wage growth and how that's, at least coming out of that payroll report, a lot of other indicators are highlighting a disagreement with average hourly earnings that comes out of the labor report that are showing higher wages, and that wage debate is really critical to the outlook for higher interest rates because higher interest rates will follow if the Fed acknowledges the strengthening of the economy through higher wages, validating that through higher interest rates. That's what we otherwise would be talking about if not for some of these global risks.
Are you looking at September or December?
Well, our baseline is for September, but clearly in the face of unknown spillover effects that we're talking about here this morning, that's a bit in play.
Schäuble out with a headline, of course, with Germany. Schäuble says he's waiting with excitement on Greek offer.
Can you tell the difference between a subdued Schäuble and an excited Schäuble? I think the spectrum is very narrow there to figure it out.
Is Janet Yellen waiting with excitement on the new data? I mean, she is a slave to the data, right?
With regards to the data, yes, because that is their framework, and they are focused on the data, and the data has been strengthening. The question will be, remember, the data is backward-looking. These are real-time events. They're going to impact the data that we'll see in the future on third quarter European economic performance and critically U.S. economic performance. And that's what she'll obviously be focused on, the data that comes out in the next couple of months ahead of September. And so that's what the market will be focused on as we move through these issues in Greece.